How we doing, people? Dropping a little Forex Friday content. So let's get to it. Okay, just going to start off with the Big Daddy, DXY. So this is the daily chart. First thing I'm going to do, get some ranges going. Dun, dun. Now, when it comes to macro assets, especially currencies, they really do operate in ranges most of the time. So I think this is really helpful. Not that it isn't helpful for all sorts of other markets. I think it's probably good to identify a range for pretty much anything. Gives you a lot of context, especially when you're doing it on a higher time frame. See, yeah, I wouldn't even call this the bottom because we're making this bottom right now. So I'll just go ahead and keep this range the same as that range high. Okay, beautiful. So we have two ranges right here.
Nice.
Now, generally speaking, it's not out of the question to see price come back into a previous range and then come back up. At least test, trade at a discount before continuing back into its previous range that it established with this initial impulse. Now, nobody knows where price is going to go, but you can assume once price is in a range that it will stay within the range unless it tells you otherwise. I mean, here we made a high, we made a low, we broke above that a little bit, still roughly operating within the range, and then we made this big move right here. As soon as we got to that range high again, you see price was ready to make a new range. Impulse higher, have a high, presumably we're going to make a low. We can assume that it's going to be around this previous range low. It could, just like this, dip a little bit into discount before it catches a bid and continues higher back towards possibly the top end of this range around 109. So that is the level. Those are the levels for the dollar that I'm interested in. I mean, obviously this isn't a currency pair, but it represents dollars. Well, euro, yen, and JBP. That's one thing you got to keep in mind about the dollar index. It only really applies to those three currencies. It's mostly the euro, and it's then a large portion, maybe like 10, 15% is the yen, and then like 5, 10% is the pound. But when you're looking at this, you want to keep that in mind. It's not like the dollar is gaining against every single currency because it's so heavily weighted with those three. Either way, though, it still is helpful. It gives you some context, especially with those pairs of where the dollar is headed, potentially headed, where resistance levels might be found, especially when they line up as we get to, the actual pairs within this dollar index, like Euro USD. Because it can act as kind of a confluence for price action within these specific markets. So we have these ranges, right? We basically have this previous range high that is very possibly going to turn into the range low amid this pullback from the dollar after this massive big move up, and that's around 105. And then the bottom of that range, around 101. So these are the ranges that we'll be looking at. Anything around this range high is going to be of interest. We're going to want to look to see if the dollar uses this as support. It can break below. That's perfectly fine. It's just a little deviation into discount. But then does it clear above this blue line, possibly form a lower or a higher low from this right here? So say this is the low that it makes. It dips into discount and it comes back up. Does it use this previous level as support and form another or a higher low and then continue? Because this would be our entry basically. If it looks like we're getting a higher low and a support off of this previous range high, then the dollar is probably headed up all the way to its previous range high. And that would give you a really good risk to reward. I mean, just your invalidation can be a lower low, pretty easy, and then you play to the range high. I mean, that's an over 5R. So that is pretty good if it played out like this. Obviously, the range dip could be a little bit lower. Maybe you'd have to bump it down like this. Either way, you get the idea. Okay. Whoops, got rid of our range. We'll add it back real quick. But that's what I'm looking at. So I see the dollar right now kind of trading near the middle. And this, in my mind, from a higher time frame perspective, is really no man's land. There's nothing I can really say about the dollar's direction with conviction, absent of it showing me it's in discount or showing it's trading in premium and giving me a good risk to reward. So I want to keep that in mind when I'm looking at these other dollar pairs, which I'll get into in just a sec. So maybe I'll just plot this out. But yeah, like I said, it'll probably be easier to see with these arrows. Here, let me change the thickness.
That's what she said.
Okay. Perfect. All right, so maybe we catch a little bit of a bounce, dip below, and then I want to see this. This is where the entry would be, making a lower low for using this as support and continuation higher. Otherwise, we could start from down here, make an underside retest of this range, or even dip or go above it, but then we form a lower low or just start to close below this previous range. Even if it was making a higher high or a higher low, it's possible it still uses this as resistance. So you want to keep the previous range in mind regardless of what happens, because you can see something like that. Maybe I'll color this slightly different. Or you could just flat out see a lower low. And as soon as you see that lower low, regardless of what happens, there's a good chance, even if it trades all the way back up to this high, this range high, that it continues lower. Right? So, I mean, there's obviously way more possibilities that could happen, but this is something you would want to be looking for. These are potential trade ideas, really, not just possibilities. This would be a long, this blue one. You want to see support on this 104, 105 level, 105. And that's also obviously a psychological level, a psych level, as they say. And then this red one, which is technically has dips below and comes back above. But you still, and honestly, seeing this, I might be convinced to still get long. I mean, right here, because it could then just rally. But you want to view it in the context of this range high. What's the relation to it? Is it below? Because that is a serious resistance level because it's still in that range. You want to see it clear above the range before you really feel comfortable taking any longs. Or we can see this purple one where it's just classic, use this level, maybe even a little bit higher. It doesn't really matter. Come above, make a lower low right there. And then your entry would just be on a retracement, probably around this level, but really anywhere in here, provided it doesn't go above that previous high. Okay, so got it. Let's get rid of that. And let's head to Euro USD. Now, a lot of craziness going on in the macro right now, but don't let it distract you. If you're playing some sort of technical edge in the market, you got to stick to it. Now is a really weird time just because interest rates are all up in the air, and that is a huge influence on currencies. For those who don't know, this maybe sounds a little bit, it's going to be very jargony, but foreign exchange rates are largely driven by interest rate differentials. So if the U.S. is raising interest rates faster than Europe, then people are going to sell euros and buy dollars, and vice versa. So it's all about the relative rate of change in the interest rates. If, like, for instance, the ECB just recently raised 50 basis points, and that was somewhat of a surprise, a little bit more hawkish. They were expecting 25 basis points. And so the euro presumably would go higher because the market hadn't fully priced in that interest rate change, because now it is gaining faster, or the interest rates are moving up faster than expected relative to the dollar, because that's really what drives, in a macro sense, these interest rate or the foreign currency exchanges.
You're a fucking idiot.
I know. All right, moving on. Now we got that out of the way, because that's like kind of a macro picture of what drives these markets in a large part. But now let's talk about these ranges. I already actually had a lot of these mapped out, as you can see. Maybe we'll even switch to weekly, get some more context. So clear, just ridiculous downtrend. I mean, look at this. But we did catch a bid off of this roughly $1, dollar parity level for, almost certainly psychological reasons. One, parity is a big deal to a lot of traders. Makes sense that we see some resistance or support there. And we have this previous range low, right? So we're not even there yet. So I am not looking to fade the euro yet, even though it might end up being a good trade. It could easily continue to fall. You never know. But I wouldn't really feel comfortable shorting. I don't want to start shorting until I see it reach this range high and this previous range low. We'll switch down to the daily, get a little bit better. So basically, maybe we see some more consolidation, some indecision, some chop, and then we start pushing higher. This is where I would be looking to fade and sell euro short, put down towards the range bottom and possibly lower. I think if things keep going and, trends usually in currencies, they last a long time. So I am not here to catch any falling knives of the euro until it really seems clear to me. But this is something I would be looking for. And I also have this little zone right here. So this is a daily chart. This would be a daily supply zone, just where this last buying really took place. And then you have this huge steep drop. You could even move this down to this previous candle, just because this was the real big impulse that kind of left a lot of imbalance. No buying really taking place in here. So we could chop like this, push up into this imbalance to fill it, possibly all the way into that supply zone. You never know, though, because, with how the macro trade that's present right now in Europe or in the euro, it could easily lead to a lot of front running. So you don't necessarily want to play off these levels. You never know. Depends on what your risk is, what your time horizon is. But really anything around this range high, I would consider fading territory. But you still want to wait for a confirmation. You don't want to just jump right in just because it gets to the range high, because that's how you get your face blown off if and when things don't go the way you thought they were. So much like the dollar index, I want to see something like this. So we say we break above, right? Even if we're pulling into the zone, you could play the supply zone. Like, there's different strategies, obviously, whatever suits your bias, but you could play the supply zone. Maybe even try to wait for like a retest or something, a lower low off of the supply. Or you could wait for it to show after deviating and coming above this range high to find support or break through, get an underside retest, or even just the fact that you're making lower highs. But I would still, much like I went over the dollar index, use this previous range as a reference. You want to at least see a candle close below it to show that it's not maybe definitive that range is holding, or that buyers are willing to step in right at this range because they're bullish, they're ready to go. So I would want to wait for some sort of confirmation, even though I am mostly bearish about the euro. There's no reason we can't see something like this, a continuation up here, and then maybe a shoot back down. Possibly even a little bit higher. Just pull liquidity from this previous range, like from the range above the previous range, and then something like that, and continuation down. So this is why you want confirmation, but if you're willing to take the risk, you just want to jump in. This is a decent area, the supply zone. It's far enough off of the previous range that I think it would be a really good potential entry, just given it's not like right here. You can get like a wick or weather a large green candle that pushes up decently high all the way into this area. You can enter here, maybe the middle of the zone, but it's a tiny zone, so I'd probably do the bottom. Let me get the order out. And honestly, I would just keep risk real low, invalidation above just the previous green candle, or this green candle right here. And then targeting these range lows if you're doing the supply zone. Now, if you are doing, let me get rid of these. Now, if we were playing a range deviation retest kind of strategy, even if it pulls from the supply zone, you don't think that's enough confirmation, totally get it. Maybe you wait till it closes under, and then you just wait for the pullback. And even if it if it comes back above the line, you can take this. Not sure if I would. Really have to wait to see how everything plays out. But I would prefer, if I saw this lower, this right here. So if we saw this lower high and then price started to go down, what I might do is enter right here. As soon as we started showing weakness after what looks like putting in a lower high from this, I might go here, invalidation, right off of that high, because presumably you're not going to make a new higher high if you're right, obviously. Yeah, enter here. Same thing, target the range low. Great risk to reward. Or you can play it extra safe. And also, I guess, depends on just how price action plays out. But you can wait for a close. Even if it goes like this, using the previous range as support, you could wait for this, a breakthrough, a close, one more retest, and a lower high within the previous range. That would be pretty definitive confirmation. And you could enter, I mean, really, as soon as that starts bouncing, maybe as soon as it breaks this, that low, you would enter basically just right when it breaks. I mean, you can put your stop anywhere. You could do it like that high, or even choose that high. Risk to reward, not as ideal, but you can probably be more sure. Honestly, now that I think about it, as soon as it breaks this level, I would say you can have the previous high, even if it's not the absolute high from the initial like downward move, use the previous high as your stop and still have a pretty decent risk to reward. Whoops. But yeah, that's what I'd be looking for the euro. I want to see it ideally reach at least reach this range high, if not to immediately use it as resistance, or to deviate slightly, pull from this zone, or just deviate and come back below. And as soon as I saw a close below, I'd probably just wait for the pullback, see how high it gets, and enter. As long as it isn't making a high, I would be willing to short, even if it was still above the range, just because I do have a bearish bias in the euro. And I'd be willing to take that trade, and then if it didn't work out, I would do the same thing over here. And that's perfectly fine, because I would even have more conviction for this one. I could do it in more size. So no harm, no foul. You take losses, you move on. That's why they're small and your wins are bigger. Hopefully. I mean, you should plan that way.
Right.
All right. Moving on. Let's skedaddle. So let's just go down the list. We'll cover most of the USD pairs, and I'll do some of the euro and maybe just GJ. But I don't want to take up too much of your Friday. Now, the reason I'm doing those Friday, I mean, obviously the alliteration is nice, Forex Fridays, but I'm doing it pretty much near market close, at least New York close, and so price action will be pretty much static over the weekend. So if you're looking at this over the weekend, it'll apply going into Monday. You'll be ready to go. You can use this as a reference, whatever works for you. All right, so same thing. We got these ranges right here, right? This is the previous range. This is the new range. We just recently put in a high, and now we're headed back lower. Now, trading anytime trading near the midpoint, not exactly ideal. You usually want to wait for something around the range. But we do have a nice little supply right here that we could potentially trade back into. I would be watching that. Here we're on the daily chart, right? Yep. And even just given how steep this drop is, even from this candle, this would be another level I would be looking at. And I would be targeting the range low. This is USD JPY, so tread lightly. You don't want to get your face ripped off. And then you could have just this right here as your invalidation. And that is a pretty good risk to reward, even if you're doing it from kind of this huge, not huge, whatever, but like this is a sizable daily candle. And then you had the drop. But either one, whichever one works for you. I do like the way it also kind of lines up with this wick. So you did have some buying going on here. So I probably would, just given that it is close to a 4-hour trade. I think this is a perfectly fine entry if you are trying to trade it short to the range bottom. But obviously this would be on a retracement. I don't want to take anything near the midpoint. And it is possible that if we do keep trading down, regardless of what happens, maybe we trade below the midpoint, we come back up into here, pull liquidity. And if you were waiting for that, you could, again, play it safer. If you don't have conviction or you just don't want to enter right on this first little push, you could wait for a lower high off of this level or even off of here, come down, lower high, and then you enter, or if it's down here and then you enter. And then I would just move your stop to right above whatever the high is that you're basing that off of. And it honestly could give you a better risk to reward if you are playing like that. It really depends on how steep the high to low are. But if you want to play it safe, you can't do that. Otherwise, I would just look at these levels and short to the bottom of the range. Whoops. Let's get this out of here. Boom. All right, so that's what I would be looking at for USD JPY. As a side note, so actually, Japan just had their inflation rate come out year over year for June, and it was below expectation, below forecast, right? So forecast 2.6 right here, and then it came in at 2.4. Now, why is that significant? Well, Japan is in the middle of quantitative easing right now. They are the only major central bank that is easing, while all these other central banks are tightening and even getting ready for quantitative tightening. So like tightening in terms of interest rates going up, but also in terms of reducing the size of their balance sheet. Now, Japan is doing the opposite. They are literally pinning their risk-free rate, their yield at 0.25%, so 25 basis points, and that to do that, whenever the yield gets out of whack, they basically just print yen and buy the bonds to pin that yield at 25 basis points. And when you do that, presumably the fear is that you're going to devalue your currency, right? Inflation. Now, their inflation is lower than expected, which means they have, in their mind, I'm sure they're thinking we have more room to continue this quantitative easing policy, this easy monetary policy. So what does that mean? That means that the yen has more room to depreciate relative to the dollar or maybe some other currency that isn't easing to the extent that Japan is, which is really nobody. But something to consider, because that did just come out yesterday, and I think not a huge difference, I suppose, but it was lower than the forecast. And it was lower than the previous month. So inflation, at least for this month, the rate of change has slowed. It's peaked potentially. We'll see if that actually ends up being the case. But still, it gives the Bank of Japan a little bit more room to continue their easy monetary policy.
Totally.
Moving on. Okay. We're having a good time, guys. It's Friday. All right. So, yeah, we got these ranges. Now, I am, for all the reasons I basically just said, very hesitant to fade USD JPY. I think the dollar has had a huge run up, and it's ripe for a pullback. Just can't go up forever, But I'm still a little cautious because you never know what's going to happen. Right now we're in a situation where either one of these currencies could have some crazy event. The Fed next week, the U.S. Fed next week is having their interest rate decision, their FOMC meeting, where they tell everyone if they're raising rates by 75 basis points or whatever it ends up being. So we'll have to keep an eye out for that because that's a huge catalyst for currencies, obviously. And who knows if there's something else that Japan does. But I'm saying is there are a lot of potential risks involved in here that could have big moves, big catalysts that can move these currencies in a pretty sizable way. And I don't care what you think about technicals. Obviously, I'm a fan of technical analysis, but it's not going to supersede whatever the heck these central banks are doing and deciding when it's this monumental. It's, you know, it really has deep implications, far-reaching implications in the global monetary system. But anyway, yeah, still, if you are just focusing on the TA, the technical analysis, just look within this range. I do, like I said, I do like either of these levels. Really, probably this candle, kind of like an order block, had this huge buying followed by pretty, well, I guess this was more like consolidation, but that's why I picked here, because this is where the imbalance is, right? This huge candle, just no consolidation, no buying, just straight down. And if it continues to, there's a very good chance we see a little bit of a retracement back into this level and then continue down to the range bottom. Maybe we end up bouncing off of this level before continuing higher. We could catch a bid there and then make a higher low and continue, which hard to say. If I saw something, saw it bounce off of this, I might be willing to take here, just take a long here if it demonstrated that it was making a higher low, especially because, well, in this case, it's in discount territory. You know, it's in the lower half of this range, and I want to buy only in discount. I don't want to go long when it's trading in premium territory of the range. So yeah, these are the levels I'd be watching. Oops, don't really need that. And that's what I would be looking for from USD JPY. Moving on. So this is the US dollar and yuan or renminbi. And pretty basic range here. Had a really, really large move up. I mean, it's possible. I would say very unlikely, but you know, if we break this range, this is what we're looking at here, right? I mean, look at all this empty space, just complete empty space. I don't know what the percentage move of this, but yeah, that's a pretty big move. 3% for our currency is huge. If you it may not sound big if you're from crypto, but it's a big move for for currencies. So yeah, we're trading in this range. We're kind of in no man's land. Nothing crazy. Maybe we can drop down actually. Okay, so let's identify the structure a little bit before we get out of hand. So we kind of got this liquidity building up diagonally, right? And same thing kind of right here. Now, where do these moves originate? So we got the low. Okay, so we could come down all the way into this level. I think this looks reminiscent of an order block. So we got demand potentially around here or off of this impulse leading to this new high, right? Because we had this impulse kind of break a structure right here, right? Because we made a high, a lower high, or higher high, higher low. Dude, I am all over the place. I can never get those right. Anyway, so a higher low and then a lower high, but you know, making this triangular structure, and then we broke out, right? So this is the start of the new move. This is the bottom. Now there's two different levels you could play off of this demand. I think this is a good level. I would probably be looking at this, maybe somewhere around there. So I would be looking for, the dollar throughout this, retracement, I suppose, to come potentially down into this level. Let me see how the risk to reward would be for this. And then a play to the range high per usual. Okay, so this is good. So I would honestly use this as my invalidation level. just because the risk to reward is more than good enough to have the entry at the top of this area right here. You can even bump this to get a better entry in case it's by one of these wicks. And then invalidation right below where this impulse really started, right here. So look for a pullback to kind of pull liquidity from this ascending liquidity line. If you want to, that's a word or phrase. And look for this breakdown where we could catch a bid here. I would definitely keep an eye on this level, but I personally don't like it, and I don't think the risk to reward would line up if I had an entry there, because I think the real invalidation level ideally would be here. You could play it off of here, but I would feel more comfortable having my stop here. So to do that, I have to have my entry a little bit lower for the risk to reward to make sense. But like I said, you could catch a bid here off of some demand in this area and then continue higher, wait for a higher low and a push in. Maybe you could enter on that higher low. But I would prefer to see price come down into here. And then I would probably, we're in discount territory at that point, which I love for longs. So I would long that. And presumably, once you see a reaction, because you're assuming this is going to be the bottom, right? You could move up your stop to right below that level. So as soon as it puts in that low, or what you believe would be the low, you can push up your stop, lower your risk, and whoops. And then you would maybe see a lower or a higher low, and then a continuation back up towards this range. So if you want to play that, or you want to just keep your stop, it's up to you. But that's how I would be looking at that. But price, the reason I would have the stop down here in the first place is because I think it's possible that price could fall all the way down here into this demand where the zone really, or the impulse really originated. So somewhere in this level, we're not trading below. So price comes in and then makes a move up higher. Hence the stop originally right there. And yeah, at the very least, you would assume that it would make it to this level. So if you wanted to get in here, stop here. I'm not sure what the risk to reward would be ideal. Yeah, 3. That's good enough. Yeah, so that's actually pretty good. Right? So just around there. Yeah. So because if you're playing just a structure-based move and you make a higher low based off of this, price comes down, still playing off this low where this impulse, this break of structure, this high originated. So this is the low we want to base our entries off of, or our demand zones. But you could do this whole thing. I'm doing this one just because of the top one, because it is a demand zone, but it also, by entering there, I still can have a good risk to reward. So why not enter there? That way I can guarantee that even if this is the zone, it's no longer here, it's kind of like a zone shift, then I can still get in the trade and have a decent risk to reward opportunity, basing it off of the new high, because you have a higher low, and then presumably what follows from that is a higher high. So we might trade higher than this actually, but you would assume that you'd at least get to this level, hence the take profit right there. And that's still a nice 3R trade, so perfectly good. So let's move on to, does anyone care about Swiss franc? Let's transition to, let's do GBP. I'm just going to stop saying that. I'm just going to say the pound. All right. So these ranges are kind of all over the place. Let's go to the daily chart real quick, get some context. So as you can see, we're kind of at the range. We actually had a little bit of a deviation and pretty strong selling. All right, let's drop down to a lower time frame. Okay, so we're on the 4 hour. So we have this range right here. Like I said, we just wicked above, kind of already pulled liquidity Honestly, yeah, let's drop down a little bit lower so we can see how that developed. See if we have any zone to play off of. Okay, so we have a couple areas of interest. And again, this is GBP, the pound, and USD. Whoops. Uh-oh. Computer's lagging, guys. Yeah, let me give you some intermission music. Okay. Yeah, we're lag city up in here. Don't worry. My computer basically died, so I had to, I had to revive it. All right, so we got this area right here. Now I don't hate it, but I always want to keep in mind that when you go to lower down on the time frame, these levels are not as reliable as if you saw them on a 4-hour daily chart or something like that. So I would prefer, especially for the risk to reward, I would prefer to play this level. I think this is potentially reason enough to think that we are headed lower, but that said, we are making overall higher highs. So this honestly could actually be a good opportunity to get a pullback, and it looks like we actually already had that. So we just missed this by about an hour. I think prices are still trading for a little bit, so we're not quite at close. But yeah, as you can see, we kind of already bounced off of this. Now, if this level holds and we start to make a higher low, I would potentially look to this for a new range, but I don't like, we are trading in premium. So I do want to, I usually don't take longs, even if they look good if I'm trading in premium, but I'm just trying to be objective here and deliver all possibilities. So as you can see, we already kind of reacted to this zone. We had this huge impulse, retraced all the way back, probably had some leftover orders, and now it looks like we're showing a little bit of strength, but we'll see. It's possible we bounce off of this and make another crack at it. I would want to see, yeah, potentially a move back to maybe this area right here. For a continuation. Where did this move? So we have this low, right? We come all the way here, make a high, make a low, make another high, and then we break structure if you consider this the low. But really, the low that led to this high, yes, this complicates it a little bit, but we clearly pulled demand from this area right here. So call it this zone. Right? I mean, you can clearly tell we had this big impulse in this consolidation range, price traded up, and then eventually we dipped below, right back into these orders, and made another new high. Now, so we can say that at the very least, this is probably the new low off of which we would base any longs. Now, price could react to this as it is doing. It could react a little bit lower, but if you're trying to play it completely safe where you have the most realistic invalidation level for your stop while maintaining a decent risk to reward, I would play off of this. So probably this red line, just because this is where we see the impulse, although we did trade back into it. So you have to keep that in mind, because it could be that could be why this zone is now the new demand zone. But it's a little messy, so I don't know if I would be super excited to take a trade off of this. I usually like to wait for something more conviction, especially if we are trading in premium. So probably not going to be longing the pound anytime soon. But yeah, I would be looking at this. Just keep market structure in mind. if we're playing off of this level, it is technically consistent with structure. You have your low here. And if we are really going to break higher, then we're probably going to go out of this range. So you can get away with, I usually like to do at least 3. And honestly, that's actually pretty much at the top of the range. So this isn't a terrible risk to reward. Invalidation level this low. And then entry, like I said, kind of on this, playing off of this candle. But if you are trying to play off of this demand zone, I mean, maybe you already missed it. I suppose you could wait for another dip into it. And then I would probably just use about there, stop around there, and maybe just target the actual high since you can get the 3. Otherwise, I would be watching these potential supply zones. Price come back into here, in which case I would prefer to do the top one. I don't know if the risk to reward would be ideal with the bottom one. And then invalidation, just new high, just right above that wick right here. And not particularly ideal, I guess, but if we are changing trend and this is the high, we're going to make a lower high. We're presumably going to make a lower low. So I would target really where this high originated, which is probably around here. So a low here. And if we break structure here, then it's pretty obvious that we are, I believe, completely shifting direction. So if we see a break below the bottom of this zone at all, say we come back in here, come back here. If we trade below this level like this, I will be looking for a pullback to sell into. Now, depending on how this price action develops, maybe we see supply here, like a good level right here. Price breaks this low, comes back up into this level, and then I would short here, invalidation right there. But again, it all depends on how price develops, because it could be that this is the new level, the new supply. It comes all the way back here. Doesn't quite make a new high, but bounces, gets in that supply, and then continues lower. So really just wait how price action develops. If we are switching trend, this is the very beginning of it. So you can't really confirm it because we just made a new high, right? Even though it is at the range high, and that is a very good shorting opportunity, because very often you just have these little liquidity pulls, this little wick outside of the range to grab liquidity because of the previous, all the stops and based off of the previous high, and then you just continue lower. But you still would want to wait for structure to confirm that. And to confirm that, we need to see a lower high put in and then a lower low, at least lower than this, and then maybe another lower high where you could be more confident, more willing to take sells off of around this level based off of this supply and come down here. But yeah, just keep structure in mind because we're in the process of potentially shifting trend to a bearish structure, but you want to wait for confirmation to see those lower highs, those lower lows put in, and then also look at these demand levels, potential demand levels, to see how price reacts. And if we break below this demand, because this is really the origin of this, of this high and then that high from it. If it breaks this is probably enough, but especially if it breaks this level, then it's pretty much confirmed that we are shifting trend, structural downtrend, and then I would be looking for any selling opportunity based off of supply that develops. All right. Just feels like a Jackson Pollock painting. You guys get that? Does that understand? Is that clear?
Totally.
Okay. Get rid of that. Clean her up. Boom. Looking good. Yeah, so that is the pound USD analysis. Let's do what do I have marks on here? We'll do EuroCAD. And then we'll call it a day for now. I think that has been more than enough. We'll just do this one and then we'll call it a day. So let's go to the daily chart, get some higher time frame context. So we got these ranges right here. This is a pretty clear range, right? Pretty clear consolidation. And then this precipitous, very steep drop. We put in a low. So we have a range low established. And we also put in a high from this crazy wick. I mean, tons of selling pressure. I mean, that's pretty wild. So we have a range high now and a range low. And we're operating roughly in the middle. But we also have this imbalance right here between these ranges, right? If you notice that a lot of the other pairs that we've looked at, the range high and the range low of the adjoining, adjacent, whatever you want to call it, ranges is the same oftentimes. But here, the range high and that previous range is low has a gap. So there is a lot of imbalance here that I would not be surprised if we saw price fill. I would like to see that. I think there's a high probability that that does happen. And so I want to map out because it could just fill here, retest that previous range, get into kind of overbought territory, and then come back down. But let me map out this level. I'll even use that bottom wick just to be safe. Okay, supply zone right there. That was our last buying before we had this really steep drop. And we'll drop down to a lower time frame to get more context in just a sec. But I would be watching out for that level. That is a pretty sizable move because you have to fill this gap and then some. So I wouldn't be surprised if we just see it trade into here and then maybe come back down. But that is what I'd be looking for. Anything above this range to fill this imbalance, especially between the ranges that we have. So let's drop down. We'll go to the 4 hour and then probably pretty quickly the 1 hour if it doesn't look good. Here's just mark up some key levels. So I like this because we had this impulse, right, as a potential buy. And it is in discount territory, which I like. And this is, yeah, so perfect. We didn't trade back into this level. Interesting. Okay. Yeah, so I'm just mapping out our levels. And then we'll view them in the context of structure and everything else. Okay, so we never traded into here, which is nice. I mean, you could consider this whole area right here the demand zone because these are the sell candles to the buy. So it didn't really have much buying take place in this whole area at all. We just shot straight from here to here. So that makes sense why this wicked in and got those orders. So it did kind of already touch on this demand zone. So what's our next one? That's why I like this level right here. This is where I would be interested in longing. And like I said, it is in discount territory. So that is a confluence. All right, yeah, so invalidation right at the previous low, just where that wick is, pretty obvious. And then at the very least, target the range high. Now, that's not ideal, but since we've established a range high, I think the possibilities, we see this a lot, you push just above, like a liquidity grab. I mean, maybe you make a second run. If it's a third one, I'd say the chance is probably even higher that you have like a little bit of a wick up, but at the very least, 285 is not terrible. I'd probably be willing to take it. Oh, that's actually, so I'd want it right there. Yeah, whatever. That's good enough. Yeah, so this is what I'll be watching. And this is pretty strong pressure, buying pressure. So we definitely have a lot of imbalance in this whole area. Whoops, actually even bigger. In this whole area that I would love to see filled. Now, if price continues a little bit higher, that's fine. And then we come back down into here. And this is where I would be interested in longing, just because we get that discount, lines up with the supply zone. We are in, even though it does look kind of like a range, it does look like we are in a structural uptrend. We made a low, we made a high, we made a higher low based off of this demand. And now there's a good chance we do end up making a higher high, which is why I think targeting slightly above the range is not out of the question. But I would want to wait to, or I would want to get on a pullback. I'm not going to chase here. I'm not going to FOMO in right here at the what is basically like the 75% level of this range. That's just a terrible risk to reward if you ask me. I want to see a pullback. I want it to come back into demand, this level right here, and then push higher, start making some higher highs, higher lows, and eventually come up to this range high. And if we do break this level, then I would maybe be looking for some shorts. So say we come back, start making some lows. We break through here, right? If we break this level, then I might be looking for some shorts based off of whatever the previous high was. So call it that level. That's my beautiful rectangle. You know, waiting here. And I want to see, ideally, I would even get an entry above this 50% level. Like I said, sell into premium, buy in discount. So if we got it into premium that lined up with some supply zone based off of a lower high after whatever this high ends up being, come back down, make a lower high, make a low, breaking through here. That previous low that kind of initiated this based off of that demand. And we come back into wherever that supply came from and short it. All right. Yeah, so hopefully that made a lot of sense. Hopefully that helped you kind of put some pieces together about the relevance of structure, about viewing supply and demand zones within the context of structure and ranges, because ranges are important and they all play together. I mean, they all can act as confluences with each trade. You know, you have one that reaffirms another. You know, if you have demand zones consistent with structure and the range, then obviously that can add to your conviction. And another moral of the story to take away: these are all currency indices. So they got the $1, euro, yen, etc. View those and view those at first to get more context about the currency pairs. Again, they're not law. It's not law of the land. DXY, for example, only really tells you where the euro, yen, and pound are going. It's not that representative of other currencies, but still, it is somewhat helpful in adding context and trend, direction, bias to all these currency pairs. Well, specifically the USD ones, and extra specifically euro, yen, and the British pound. All right, well, I think that does it for Forex Fridays. All right, well, on that note, I will leave you with some happy feel-good Friday music. All right, guys, stay happy, humble, and solvent. Peace out.